So the massive chip architecture designer Arm Holdings is set to go public just tomorrow from when this video is uploaded. And guys, with all the frenzy surrounding artificial intelligence and other chip designers this year, everyone is wondering if Arm is going to be that next chip stock to really skyrocket like we saw with something like Nvidia, who more than tripled in share price just this year alone. In fact, there is so much buzz surrounding this Arm IPO that despite most analysts calling it overvalued and really expensive and overpriced, well, they're actually thinking about raising their IPO price because there is so much demand for the stock, which is pretty crazy. But look, if any of this sounds a little confusing to you or you're not too familiar with Arm, well, you came to the right place because in today's video, we're going to talk all about it. We're going to take a look at who Arm is, what they do, their business, their future potential. We're going to take a look at the IPO and the stock price and the valuation. And I'm going to let you know if I think it's expensive or cheap from the IPO perspective. And as a long-term investor, I'll let you know if I plan to buy any of the stock myself too. So it's going to be a ton of fun. Sit back, relax. We're going to have a good time here. And by the way, if you want to ever chat with me or other like-minded investors about upcoming IPOs or any other market news or other topics, then maybe consider signing up for our community Discord, which you can get access to through Patreon. I'll have the link down in the description, and thank you for all that support. But with all that said, we got some really interesting stuff to run through here, so let's just dive straight into this IPO and see what it's all about. Alright, now if you've never heard of Arm before, then it's probably because you're not that into technology or computers, because in the world of processing chips, Arm is actually one of the biggest players and is very well known for designing the world's most popular chip architecture. In fact, Arm chips are actually used in 99% of all smartphones. How crazy is that? Now, if you don't know what a chip architecture is, I'll just make this very simple for you. It's basically the standard blueprint and set of components and instructions that chips are built on. The two biggest of which are ARM and x86. Now, there are a ton of exceptions to everything that I'm about to say, so just keep that in mind. I'm really simplifying all of this for the sake of time and so that I don't, confuse you too much. But in the general sense, x86 chips tend to be much more power hungry and are used for larger computing. So you'll typically see them used in massive data centers for the cloud, or on supercomputers for artificial intelligence and machine learning, or on gaming computers, or even in consumer desktops and laptops as well. For example, CPUs from Intel and AMD are almost always built on this x86 architecture. And a general rule of thumb is that any chip that isn't made by those two, Intel or AMD, is probably an ARM's chip. Speaking of which, ARM chips are much more energy efficient than x86 with a simpler architecture that is meant to run lean and fast. In fact, it's right there in the name. x86 uses CISC, which stands for Complex Instruction Set Computing, while ARM uses RISC, which is Reduced Instruction Set Computing. And because of that, you'll typically see these fast, battery-efficient ARM chips being used on smaller devices that complete simpler tasks like smartphones and tablets. Again, there will be some crossover at times, and we'll talk more about that in a second, but the majority of the time, this is what you typically see right now. For example, both Apple and Android smartphones are almost always using ARM-based chips that are built by Samsung or Qualcomm, who makes the popular Snapdragon chips, or even Apple and Google, who now make their own custom chips as well. All of which are built with ARM components and blueprints, and because the company Arm Holdings designed that architecture, they get to collect license and royalty fees from every single one of them. In fact, ARM is so broadly used at this point that there were over 230 billion ARM-based chips produced as of last year, and in total, ARM is the most widely used architecture in the entire world, even ahead of x86. Again though, this is mostly in smaller devices where ARM completely dominates. However, there's been a recent push by ARM to enter the high performance computing markets too. For example, Apple's MacBooks now use their own in-house M1 chip, which is built on ARM. And as a result, ARM's PC market share is expected to nearly double in size by 2027, reaching about a quarter of the entire market. And even at a larger scale, NVIDIA's new Grace CPUs for servers, data centers, and AI supercomputers are actually built on ARM as well, and it's said to deliver 30% higher performance while also being 70% more energy efficient versus the latest x86 chips. That's really impressive. But digging a little deeper into market shares, here's a chart breaking down some of the different segments for ARM by Statista. Now the light blue bar is ARM's market share in 2019, while the dark blue is their projected share by 2028. And what this shows is that ARM already holds a gigantic grip on the mobile market with a whopping 90% market share in mobile processors. They have another 90% share in the Internet of Things, which I think will be huge in the future. And they're even projected to reach 90% in vehicle infotainment and autonomous driving too, which is also set to be another really large market as well in the future. And even in areas where there's still a small player, there too they expect to see huge gains. In networking, for example, they're projected to more than double their size from 32% up to 65%, and in data center and cloud, they're projected to skyrocket up to 25%, which is like 5 times larger. But how does all of that market potential and future leadership translate over to their financials and the IPO stock? And will it make the valuation expensive or cheap? Is it worth investing in early on? Let's go ahead and cover that topic right now. Okay, so the first thing you should know is that the Japanese bank called SoftBank bought the company ARM Holdings for $32 billion back in 2016. Then in 2020, NVIDIA actually tried to purchase ARM from SoftBank for $40 billion in what they claimed would make NVIDIA the world's premier computing company for the age of artificial intelligence. And yeah, it's crazy to think how much bigger and even more dominant NVIDIA would be today if that deal had gone through. In fact, I was actually buying NVIDIA stock during that time because I felt like the deal would definitely make them more attractive to own long term. However, the FTC and other regulatory bodies did essentially block the deal, which forced NVIDIA to back out of it in 2022. Well, fast forward to about a year later here in 2023, and SoftBank is now taking the company public in order to cash in on their original investment, which, as it stands, ARM is aiming to IPO somewhere between $47 and $51 a share. Now, by the time you watch this video, you'll see what share price it's actually trading at. But you should also keep in mind that at least at the time of this recording, ARM was actually considering raising that share price even higher given the incredibly high demand from investors that have already signed up to purchase the stock. But even just at the high end of that initial range, we could potentially be looking at about a $55 billion valuation here based on that higher share price, which would be around $23 billion more than what SoftBank paid for them and about $15 billion more than what NVIDIA offered. But of course, the company has grown larger since then, right? So how do their financials stack up to this new valuation, and how expensive does it make the stock at IPO? Well, we do have a few years of data to go off of based on the prospectus that they filed with the SEC, where we saw that sales skyrocketed by 33% in 2021 during the pandemic boom, but then fell slightly by 1% the year after, which is actually still pretty good. I mean, considering that the global chips market has been in really heavy decline coming off of the pandemic, but that's mostly been in the PC market, which again, ARM is more of a mobile player, and that's probably why they were a little more insulated from the damage and saw better overall performance than most other chip companies. By the way, net income profits did fall last year too, but it was also relatively small of a dip of just around 5%. Now looking forward, there's no analyst projections available for us to use yet. We should be getting those soon, but as of right now, ARM themselves did recently travel around doing an IPO roadshow where they advertised the stock to potential investors, which by the way seems to has had a lot of success because Taiwan Semiconductor just announced this week that they're planning to buy $100 million of the stock, which is on top of other giants like AMD, Apple, Google, Intel, Nvidia, and Samsung, all together saying that they plan to buy over $700 million as well. To my knowledge, though, I don't think any of these companies have to actually go through with these purchases. I think they're just saying that they plan to buy the IPO, but either way, it's definitely a good sign for ARM, especially coming from like Taiwan Semiconductor. They build like most of these companies' chips. So the fact that these companies are willing to invest in ARM, that's a very good sign. That means that they know what they're talking about and they think that ARM is in a good place. Anyway, back to that roadshow. In the presentations, ARM noted that they expect to grow sales by around 11% and 25% in each of the next 2 years, respectively. So, adding that to the chart here, it would definitely be a great sign of returning to healthy growth. However, before you get too excited about that, you should know that their most recent earnings for last quarter actually showed some pretty bad performance despite this year's optimism, with sales falling 2% and profits crashing by over 50%. That's in stark contrast to something like Nvidia, who actually saw revenues more than double while profits skyrocketed by over 840%. Guys, what this tells me is that rather than being this huge play on or beneficiary from artificial intelligence, I think ARM is more likely just kind of riding whatever this recovery wave is that the broader chips market is going through right now. And more specifically, I think it's mostly coming from mobile computing for ARM rather than, larger supercomputing or actual AI usage. Don't get me wrong, I'm sure ARM is being used for at least some AI already, and I also strongly believe that the exposure will grow larger over time for them, which ARM also noted in their prospectus that more growth is coming in future years because of how much room there is for expanding their business into the data center and AI markets where they're still relatively small. But at present time, I'm just not sure that the explosive growth is here yet to really justify the rich valuation, which even if we ignore the fact that their net income has been falling in the past year and crashed by a huge amount last quarter, and we're generous in assuming that it'll still be the same amount this year as it was last year without any declines, that would still put them at a forward price to earnings ratio of over 100. For comparison, Nvidia has a forward PE of only 42, despite that gigantically higher growth, and I would argue that they have much more AI exposure as well. And many other chip stocks are also considerably cheaper too. I mean, Intel and AMD are both in the 20s range, and Broadcom and ASML are also right around there too. And those are different plays on the future of chips, but they each have their own unique offerings of, either catering to custom business chips or cybersecurity or data center, or even providing the tools and services to actually, physically build the chips as well. And Broadcom even pays a really nice dividend too. And look, maybe profits will skyrocket this year for ARM, but even if we assume that they double in size, which is extremely unlikely, if not impossible, but even if they double from here this year, that would still put them at a forward PE ratio of over 50, which is still more expensive than all of these peers. And even on a more forgiving price to sales ratio, they're only just barely cheaper than Nvidia, but still more than twice as expensive as all the other stocks, if not like 3 or 4 times higher. And finally, the last sort of concern that I want to leave you with here before I give my overall conclusion is that most recent IPOs have underperformed by pretty large amounts over time. In fact, here's a list of the past 10 largest, and every single one of them is technically down today from their first day highs of IPOing, while only 2 of them are actually green from the official IPO price, and that's pretty hard. That's a pretty hard price to get anyway, unless you're either a huge institutional investor with special privileges, or you use an IPO early access feature from Robinhood or something similar, which can still be pretty limited at times. But overall, and on average, you would have actually seen much better performance from just buying the S&P 500 instead of all of these rich IPOs. That's not to say that ARM can't be different this time around though, and of course, if the stock price crashes right away, then and you pick it up at a lower price, it could definitely outperform in that sense as well. And considering, how crazy the hype has become for AI recently, with Nvidia stock soaring to the moon, more than tripling in stock price just this year alone, I would say that anything is really possible at this point. But as a bit more of a cautious and really long-term minded investor, I'm just not that interested in making this type of short-term gamble when it's so difficult to predict the stock's trajectory. I mean, I'd much rather wait a few weeks or months or maybe even years so that I can get a better idea of how this company and their business performs on a more consistent basis over time, and I can also see how the market reacts to that performance as well. And then later on, I can decide to make a play on it if I see the stock price dip and I like the company and I like how they're performing, then I can decide to pick up the stock at that time. But for now, I just feel like there's too much speculation here. And even though I do think the company will be successful long term, and I'm very interested in the stock, I'll be keeping a very close eye on it. But the valuation as of right now is just a bit too expensive for me personally. But you also have to keep in mind that this is coming from someone that already has a lot of chip exposure. I mean, I own a lot of stocks like Nvidia, Intel, Broadcom, Google, Apple, and others too. And a lot of those give me exposure to chips, to artificial intelligence. I have other stocks that have a lot of exposure to artificial intelligence. Valuations are a lot cheaper too. So I like a lot of these stocks already. I don't necessarily need more exposure to these areas. And because of that, and also because I'm a long-term minded investor, I have the luxury of being able to just kind of wait on the sidelines and see what happens. If the stock price, skyrockets here with Arm, and it takes off and I kind of miss the boat, that's really fine. I already own a lot of chip stocks anyway. It doesn't really matter. And if the stock price crashes from here, well, I'll be able to buy in at much lower prices because I waited. So it's kind of a win-win for me. I can really just stay on the sidelines and everything turns out fine for me. But you might be different. You might be in a different situation, or you might have a different strategy. And so I would love to hear what you're doing down below in the comment section. Let me know if you'll be picking up this stock. Of course, don't ever just copy me, do your own research and make your own decisions. I'm just sharing my opinion, but this is how I feel at present time. I'll be waiting on the sidelines for a bit, but I'll be keeping a very close eye on this one. It's one of the most interesting stocks that I've seen in quite a while. So anyway, let me know down below. We'll have a chat about it, and I hope that you enjoyed this video, but I will catch you in the next one, my friends. Thanks again for all the support. I'll see you next time. Take care. Bye-bye.